BFT Stock is another SPAC that's merging with a company called PaySafe in a behemoth $9 billion deal. And this is different from many other SPACs we've seen here in 2020 during SPAC mania, and I'm going to explain exactly why in this video. So if PaySafe intrigues you, if you like looking at investing in companies that actually have a proven track record, not companies that have a concept, a design, they're pre-revenue, this is the video for you. I have got countless of requests from you guys, my subscribers, to cover this talk. So here you go. I hope you enjoy the video. What we're going to talk about today, guys, is first the terms of this merger deal. Secondly, what does PaySafe do? I'm going to talk about the company and explain to you what their actual value proposition is here, and talk a little bit about the competitors as well. And finally, what is my price prediction or outlook for this stock? If you appreciate the subscriber requested video, all I ask in return, guys, smash that like button down below, turn it blue, help the YouTube channel. I appreciate it tons. So starting off here with the terms of the deal, let's talk about PaySafe and BFT. The merger is expected to close in early 2021, and once the merger is completed, the new ticker symbol will be PSFE. This means if you want to eventually have PaySafe as a stock in your portfolio that you own, you should probably consider looking at BFT stock today, which is the shell company that will have its ticker symbol converted to PaySafe's ticker symbol once the merger completes. But guys, just know that there is risk with this. This is not a 100% guarantee. There is still a few things that the companies need to do to get this merger completed and passed. They've announced their intention and they've announced the terms of the deal, but there is still a small amount of risk that, maybe things fall apart and the merger never completes. Anyways, looking at the valuation, guys, the deal, as I mentioned, is expected to close at a $9 billion valuation. So this means that the value that they see for PaySafe is $9 billion. Through this merger, PaySafe is expected to pay down their $1.7 billion in debt through the $2 billion in PIPE investments they will be receiving. This will leave PaySafe in a strong financial position. The other thing to note is that the ownership pie, if you hold BFT stock here before the merger, you will actually be part of the 22.5% of the pie. Once the companies merge together, you're officially holding PaySafe. So just keep this in mind when we're doing today's valuation calculations. It's not a one-to-one per se. You'll only own 22.5% of the final company if you're buying BFT stock today. So just keep that in mind. Okay, boring details out the way. Let's now talk, what does PaySafe do and what is their actual uniqueness? What makes them different? So this slide really summarizes it well. PaySafe at its core is a fintech company. Think of like a PayPal competitor with some unique differentiators which we'll touch on. They operate a B2B, business to business, and B2C, business to consumer, global network with a suite of digital wallet, e-cash, and integrated processing solutions. Their primary focus has been on rising gaming industry, and they're the global market leader in iGaming payments, and they keep growing here. Really what they want to provide their customers is a safe way, aka the name PaySafe, to pay for transactions mainly focused on the gaming market. So as we're seeing services and platforms like DraftKings, like Twitch, like countless others pick up popularity here, PaySafe is kind of at the core of that because it allows customers to use these kind of platforms, pay for things safely, and privacy and security is big, especially here in 2020. You can see here that they have three pillars of focus really. They have a digital wallet, which is similar to PayPal, and they're in 120 plus markets for this. They have an iGaming e-cash network, and this is their secret sauce really, and this is currently in 50 plus markets. And then they have some exposure to point of sale to help merchants, but this is highly competitive as they're number 4 here in the market with this. Now you can see how each of these pillars really builds on the company's success. You can see some impressive stats here with high margins, high organic growth, and high amounts of transactions done through their various platforms. Now keep in mind, the dollar volume here isn't exactly their revenue. It's not the money the company is actually taking in and keeping. This is just the dollar amounts transacted through them, but there's over $100 billion in volume, so that's pretty significant, and that means that people do trust PaySafe and their platforms to send money through. So this should give you a pretty good idea of, where PaySafe really plays in the market, what they're really trying to achieve, the uniqueness that they're trying to offer. Like I said, iGaming is something that they really, really want to double down on and really be the leaders in long term, because the other two segments, like we'll talk about soon, are highly competitive. Now, this company is so confident with their product that they actually show a table here comparing it to PayPal, a competitor, and they also show some other competitors. But always remember, guys, to do more due diligence when you see these sort of marketing slides. Oftentimes data is kind of manipulated in a sense, or skewed to kind of fit their narrative. This really shows us the biggest threat is PayPal, but if you just look at the chart, you're like, hey, this looks awesome. They actually have all the pies filled, whereas PayPal has a few pies missing. But if you actually look at the details here, they claim to be better at vertical focus and risk management, and both of those things I think are pretty subjective and relative, so just be cautious when you see these sort of high-level slides. Of course they want to compare themselves to PayPal, because PayPal is a giant. It's a $250 billion company. This company is a $9 billion company. So you can see they're trying to say, hey, we're like PayPal, we're actually better than PayPal in some sense, so invest in us. Now, here's the thing, with small businesses like PaySafe, $9 billion, yeah, I guess it's not a small company, but in the grand scheme of things, you're gonna look at companies like PayPal, comparing it to, this is a small business. You wanna make sure that the market that they're going after is huge, and I'm talking massive. I'm talking, hundreds of billions, trillions of dollars if possible, because there has to be enough in that pie for a smaller player to come in and start growing, even though large established players have been doing this for many, many years. Think about it. If the market potential isn't that big, why would you want to risk your capital in a small business like this when you just put your money into PayPal, for example, have some good growth, see some good appreciation, and just continue riding that wave? There has to be an appeal, and the market size, to me, is one of those factors. The good news is that the TAM, total addressable market, for PaySafe is massive. It's a monster, guys. It's $58 trillion, and they're going after this big time. So there's plenty of room here for many players. So that reduces some concerns I had on competition. And here's the thing, 58 trillion is what it is today. It's gonna get bigger and bigger and bigger in the future. Because you just ask yourself this question, like the amount of things that you use for transaction online today, do you think it'll be more relevant in 5-10 years or less relevant? Do you think you'll be paying for more things online or less things? I think the answer is pretty clear. We're all going to be doing a lot more digital transactions in the next 5 to 10 years. And if 2020 has taught us anything, it's that digital payments, online platforms, just doing things all virtually is the way of the future. Okay, now this I think needs to be said, and some of you may disagree with me on this, and that's completely fine, okay? I want to hear your thoughts if you do. I think that PayPal and Square, two big competitors in this space, are just too far ahead for PaySafe to actually catch up and become number one or number two. I think that ship has sailed. Square's like a $100 billion company, PayPal's a $250 billion company. They're well ahead of the PaySafe here with competition. I don't think that PaySafe can really catch up to them. However, because of the market size, I think that being number 3, number 4, even number 5 is still perfectly fine. And I think PaySafe has a very strong shot of being that number 3 or number 4 player in the long term. And if you use the market caps like I discussed, PayPal $250 billion, Square $100 billion, PaySafe $9 billion, but it could be the number 3, number 4 player. I think it may actually be quite undervalued here, and the market may be overlooking this business. So that comes up to my next question. What is my price prediction and outlook for this stock? So based on my calculation and what the price is at today for this stock, using the pro forma calculation that they provided us, I see the market cap for this company after the merger being at around, 10, $11 billion, still a far cry from Square's $100 billion or PayPal's $250. From what I was able to gather, in 2019, they actually pulled in $1.4 billion in revenue, but they are still not yet a profitable company, so that does need to be recognized and factored in. Now for my calculation, I made an assumption that they should pull in $1.4 billion again here in 2020. I think they're probably going to beat that quite comfortably, but base case, let's just use that number. If that's true and we assume a $10 billion market cap, this would put our price of sales at around a 7x. For comparison, PayPal is at a price to sales of 12x, Square is at a price to sales of 10x. So compared to its peers, this company is trading at a lower valuation, which signals a possible buying opportunity. So I think if PaySafe was valued more fairly like their peers with a higher price to sales, that should put their company at around a $14 to $15 billion market cap. This means that we're probably sitting at around, $4 billion short of what the value should be based on its peers, meaning the company is around 30% undervalued today. With the price of share today of around $13 per share, that gives us a target, guys, of around $17 per share, which seems reasonable for this company and in line with its peers. Now here's the thing, I think that the market could actually hit that price pretty quickly. We could definitely see a 30% gain in the stock in a matter of days if the market realizes this and they price this like they've priced Square and PayPal and other competitors in the space. That being said, a lot of big investors that want to invest in PaySafe may actually be waiting for that merger to complete because, like I said, there is still risk involved today. And if you're buying today, you're technically just buying a shell company. And if the merger falls through, you're going to be losing some money. But anyways, I just wanted to present this to you guys. It was a requested video from you, and it's a good catch by you guys. This looks like a pretty interesting business. We'll see if I end up buying. I'm not too sure, not fully, convinced yet. I like this space. I really like Visa in this space. I think they're going to do some big things in the next few years in regards to competition with these other companies. But hey, that's for another video, guys. I want to hear your thoughts on PaySafe and whether you plan to buy this stock and whether you enjoyed this price prediction that I threw in here. If you did, I can do this for more stocks going forward. Just let me know in the comment section down below. So keep in mind that another company that may go public within the next year is Stripe. Stripe is another competitor in this space, and that would be one that I would be very interested in depending on the valuation. PaySafe, I'll be honest, I've never really heard of it before until recently, until researching this, but they are significant, they are relevant. $9 billion is nothing to sneeze at, and I think the market could actually be overlooking this right now, with some good potential upside in the relative short term. Guys, either way, hope this video was informative. If it was, like I said, smash the like button down below. Don't forget to invest positively, and I'll see you in the next one. Peace.